Paul Bashir, Roundhill Capital. Paul, tell us briefly what Roundhill Capital does.
Yeah, Roundhill Capital are a fully integrated real estate investor and manager. We invest in assets across Europe. We currently have around $6 billion under management in three principal sectors: residential, commercial and student housing. We have around 35,000 residential units under management in Germany. We have a large commercial platform in 4 countries: Belgium, Austria, Netherlands and Germany, which is managed out of our Berlin office. And in London we have an investment in a Nido student housing platform, which is 2,500 beds in central London. Nido is a premium student housing product.
Student housing market in London, what makes it so attractive?
Well, we acquired the assets in 2012 from Blackstone. Blackstone had developed the assets and created the Nido operating platform. We felt the student housing market for us as opportunistic real estate investors had strong commercial real estate fundamentals. There was significant growth we felt still left in the market. And London, we felt as a location for not only students but international students, which really Nido really focused towards. We felt there was a significant market opportunity there. And it actually has turned out to be the case. I mean, we have grown revenue since we bought it 8% year on year. We have grown NOI by 14% since we acquired it. And we've significantly invested in the operational platform. And Nido now is one of the UK, European leading premium branded student housing operators.
The student housing market in London is focusing predominantly on foreign students, is that correct?
Well, I think London naturally attracts disproportionately more foreign students than Manchester, Leeds or Sheffield, for example. And I think London has that agglomeration effect that actually international students want to be in London for a lot more reasons than just to gain a good academic qualification. There's a huge cultural experience that they like to benefit here. Typically our students come from middle income families in Asia, for example, whereby there's a certain kudos to send your child to London to study because of the peripheral benefits that brings their education. So I think London will always attract, as a leading global city within the English-spoken world, a significant proportion of global international students.
And do you see this as a trend? Is that continuing?
I think the forecast is to continue to grow by around 20% over the next 3 to 4 years. Certainly, we think London as an international location will always remain an international location. Student housing for us in London is significantly interesting because of that supply-demand imbalance. So even if the number stayed stable, there is still a significant undersupply of student housing in London. The growth in international students coming to London will only really just exaggerate the problem of lack of supply of housing.
Do you see an element or elements of risk attached to the dependency on foreign students?
For who exactly? For the UK? For us?
For the UK, yeah, for you.
Mm-hmm. I think there is obviously a macro risk in our specific area. We are vulnerable to changes in visa entry requirements, FX changes that make the London education experience significantly more or less expensive year on year. So there are of course macro risks. I think given our demographic, where we are targeting on the premium end of the market, we see actually the sensitivities around that pricing to be a lot less than in the middle market. The premium end of the market seems to be reasonably resilient and seems to be where parents who ultimately have the veto on where their students go will still spend a significant proportion of their disposable income on their child's education. So it will always be vulnerable, as any investment will be. It will have its investment risks, but certainly we think because of the strong pull of London globally, we think certainly London is significantly more resilient in this space than other areas.
London has specific characteristics. You mentioned that already. Is there any opportunity you see outside of London in other university cities, maybe outside the UK?
Absolutely. I mean, the asset class of student housing is well proven to work in other regional parts of the UK. Clearly, the brand of the student housing operator, the price point, the services that it's offered, the aspects of the student housing in terms of the proximity to the campus, and in terms of the relationship between that student housing operator and the university is clearly very different city to city. It's not something that we feel at the moment we are looking at. We see significant opportunities still in London. And I think from the Nido product, we will still continue to look at opportunities outside of London, but certainly for the short and medium term, our focus is very much on central London.
You just had a very insightful discussion on student housing and institutional asset class. Is it mainstream already? It's certainly very different to what it was 10 years ago. What was the conclusion? Was there any conclusion?
Yeah, I mean, I think there was an interesting panel mix because we had an investment banker, we had an investment manager who lent a lot of to a lot of student housing operators, and obviously we had a developer who not only developed the Nido products actually, but also is currently developing a brand for another private equity group. I think the conclusions certainly I would take from that is that there are certain phases to the investment cycle. Certainly in student housing, you had a lot of developers looking, owner-operators of developers of single assets that identified the opportunity in terms of the supply-demand imbalance. So would typically develop the assets. You then had the opportunistic investor phase, which would, typically Roundhill Capital would be a typical investment in that space where we identify the opportunity in the market, but also we identify the fact that there's a lot of work to do from an asset management, a very intensive asset management. The operator may not be well established, so there's a lot of work to be done to create the operator in terms of establishing, yield management policies, leasing strategies, and that really is let's call it the stabilization phase. And then certainly then, I don't think we've quite reached the end of that cycle yet, but then it becomes a point whereby the asset class becomes stabilized, becomes more of an institutionalized commercial real estate product. And that is where, that phase of investor where you will start to attract the more standard institutionalized real estate investors. And that's potentially where we are entering over the course of the next 12 to 18 months, certainly in London. But again, London is a very different market to the other parts of the UK, which certainly Nido are not exposed to, and I'm not overly familiar with.
Paul, thank you very much for your time. Yeah.
Great.
Thank you.
Thanks.